Good morning and afternoon to some of you. Welcome to the webinar. Today we're going to be talking about an industry that's really just been picking up a lot of steam over the last few years, fintech, and kind of what the landscape looks like and just going ahead from here. So I'll introduce our two panelists. We have Scott Williams, just to my right here. He's the Director of Software Development at Tallwave, and Raphael Hyde is the product designer at Tallwave. So I'll let you guys kind of introduce yourselves a little bit more.
Yeah, hi. I've been working in software for a really long time now, I think over 20 years, counting everything. Built products for small, little, teeny tiny startups to giant corporations, your Fortune 500s. And here at Tallwave, I manage all the software development efforts in terms of strategy, the teams itself, and kind of the architecture of everything. Deal a lot lately with some of these financial institutions, both big and small, and kind of help them get products out into the market and help them be successful.
Awesome. And I'm Raphael. Good morning, everyone. So my background is product design. In my former career, I did hardware, and so interfacing with physical products and users, and the mechanical and the development of that. And now I'm more focused on the digital side of things, and I've worked in clean tech and medical, and now in more consumer and enterprise-focused products. And I have a large enthusiasm for creating more of a prosperous and economical future for people through technology and figuring out ways we can kind of house society in the best way possible to protect us. So thank you for having me.
So today we're just going to be talking about how fintechs are disrupting the industry, how user experience and APIs are really impacting the growth of fintechs, and kind of what financial institutions are doing or must do to stay relevant, and then some of the advantages and disadvantages, both in the traditional financial services and then among fintechs, and then kind of a overview or predictions of where it's all headed. So and then just a reminder too that this is very interactive. So there is a chat enabled in Zoom. So please feel free to post any questions there, and we'll get them answered. So to kind of kick things off, just for those who may be unfamiliar with what fintech is, how would you describe it?
Want to take this one, Scott?
Oh, sure. Yeah, I'll take it. So fintech is kind of a silly buzzword of just financial technology mashed up together. Because if you don't have a fancy buzzword, I mean, do you really even exist, to be honest? I mean, you can think of, if you want to backdate it, it goes back pretty far, like even with the foundation of PayPal is probably the biggest, most modern one that you'll hear about. Although you could also apply to traditional financial institutions, others like that. Other big companies are like Square, Dwolla, Swipe, and a ton of others that are just kind of coming up pretty recently.
Yeah, and just to add to that, I'd say technology moves in waves. And so now we are kind of in this, technology is becoming more localized to our devices. So it's being centered around the user versus being centered around the centralization of the technology hub. So I think this fintech wave is pushing us more towards peer-to-peer, empowering the individuals so they have access to features that maybe they didn't have before, just due to the information and Internet of Things and big data. So I think fintech is more about you than it ever was before.
Yeah, and I think we're at this point where like the first really big wave of it crashed or hit, I guess I should say, when PayPal made all their money, and now we're kind of seeing that more uptick again with everything that Raphael just said with mobile and with all the social media and everything like that. It's starting to crest again. So we're not even sure where the top of that is yet at this point.
Mm-hmm. Exciting.
Yeah, it's so interesting. What would you say, and maybe you kind of already addressed this, but kickstarted all of this?
All of this right now? I mean, with this phase of it, the devices, like Raphael was just saying, that are in our pocket are now essentially more powerful computers than what we had on our desktops like 5 years ago. So we can do so much more with it, like at any place on the earth practically, with what we can, including, not just updating our Facebook, but also doing some sort of banking or some sort of investment or who knows what else.
Yeah, that's a really good point. And maybe one other item that's kind of kickstarted this, I think just the idea that finance historically was something that you usually left to the responsibility of someone else. And I think now with the availability of information, people are realizing I don't have to pay someone to do this for me. I can use an application. I can do a little research and I can save that money, or I can start to create my own strategy that's around my lifestyle versus maybe a hedge fund or a big bank. So I think that's that trend where people are starting to make their own decisions is kind of like helping that push.
Yeah, I mean, think of like where the travel industry was 10 years ago, where you needed, or probably more like 15. What year is it? Yeah. Where you needed a travel agent to kind of figure out how you're going to get from where you are to Florida, and where you're going to stay and what kind of swaps you're going to visit while you're out there. But now you can do all of that your own without needing anyone, just in 5 or 10 minutes. Find an Airbnb, find anything on whatever, and you're good to go.
Yeah, that's a good point. Yeah, maybe we'll get to the shared economy later, probably, but I think that's also
yeah.
Yes.
Yeah, that is interesting. It's morphing to the way we want to do things now. And it also seems like kind of the API revolution has also started to hit fintech. How would you say that APIs are really shaping the financial services industry?
Sure, great question. Please cut me off if I start to go too long on this.
No, this is your
okay. First, let's explain what an API is.
Yes.
An API is just a way for one piece of software to communicate properly with another. My favorite example is like a power outlet, for a real world analogy. If I want to get electricity to my light, I could punch a hole in my wall, pull out the main line, splice in the wires together, and the light will turn on, but I might burn my house down in the process. Whereas you have this connector with the outlet where I just plug it in and it works, and it's safe and it's easy to figure out. From a software perspective, a good API is just like that, where you can plug in, get exactly what you want out of it, and do something that used to be really hard, really complex, and it's so easy now. With fintech in particular, I think we're going to start to see a lot in terms of disruption from that, because if your big traditional financial institutions don't have good APIs that allow internal use or let alone external use, they're going to get creamed by the small startups who do, that are figuring things out and rising there. A kind of a great story, that anecdote, is related to Amazon.com. When they were relatively early, when they were still just a store where you bought books from, Jeff Bezos put out an executive mandate, their CEO, saying that every single group or service within Amazon has to have some sort of external service that other teams can use to communicate with. And you can only communicate with services that way. No backdoors, no querying directly into their database. It has to go through this API. And further, all of these services, with no exceptions, has to be built with the intention of being externalized eventually, so that people outside can communicate with those services. If you don't do it, you're fired. He's a great motivator in that way.
Yeah.
But what that allowed them to do, that allowed them to build AWS, Amazon Web Services. That came out of that decision to do that and get their APIs and their teams talking together. And AWS is a gigantic tentpole in terms of Amazon's revenue and operations. Like half the internet runs on AWS now. It's kind of nuts. And that's where they came from. I think there's an opportunity, like who's going to have AWS in the fintech community, because there's no reason why that can't happen. You have an extra layer of complexity when it comes to like personal credit information and that type of financial data, but I don't think there's a player out there yet that is set up for that. And I think there's a huge chance for that.
Can you share an example maybe of how a company might use an API?
Yeah. I mean, so let's go back and pick on the big financial institutions that have been around for hundreds of years, we'll say. They have their own technology groups, all of them do. And they have some very talented people there, and they're doing a lot of hard stuff. But there's also a high level of dysfunction in those. Usually it just builds up over time. You get a bunch of people together, stuff's just not going to be all kumbaya right away, especially when tech is thrown in there. And so we've seen that it can take months, like literally months, just to find out to get the right kind of access, just to call those APIs or to call into a service like that. Months to figure that out. And so that just slows everything down. You can't, we're to the point where you can't even make any assumptions because you don't know what's in there. and your assumption could be totally wrong, and you have to kind of go back to square one at that point. Whereas if you thought about how Amazon works, what if instead of having to go that whole rigmarole, there was a really well documented API that I can just plug into if I need to apply to it and get special authentication so that I can have access to the right financial data? Cool. But I shouldn't have to take months to find that out. I should be able to look at a document. Even a layperson should be able to look at some sort of service or API and think, what can I do with this? Instead of having to talk to experts, schedule time, figure that out. Yeah, like I saw how one team once figured out a service. The first time they got to see it after months of negotiating was someone sent them a PowerPoint deck with screenshots of what was in there. So yeah, that's
and it seems like a lot of the fintechs are using now APIs that are being built to build their kind of software. So, for instance, like Plaid's API, they have an ACH, and a lot of companies are now building, just leveraging that technology rather than going out and building their own.
Yeah.
And then I know like Fidor Bank out of Germany is a big one. They've got, I think, over 40 APIs that a lot of these fintechs are just leveraging to do things like payments and the ACH, and even getting market data and things like that.
Yeah.
So
it's a huge benefit for a startup in that space. And it's been this way for a little while, at least in terms of payments, because you don't have to manage PCI compliance on your own anymore. You can just call out to Braintree or Stripe or whoever else, Plaid, if you really need to do ACH. And just let them deal with that, let them worry about it. And you can focus on your actual product that way too.
Yeah. Do you think that there's still room to grow? Do you think all of the APIs have been essentially created, or is there still room out there?
Gosh, I think I've heard a lot of hedge fund managers and VCs talk about how APIs are going to be kind of the next breath of the evolution of the internet, and I think application development. So I think they'll just continuously be developed, because now we're seeing information being collected about autonomy and robotics. Sensory technologies has gone through the roof in terms of like, what are the intermittent steps if users are using wearables? Are there behavioral changes throughout their day? Can we capture those little minute events, and can we create intelligence from that so that we can characterize our product experience so it tailors to their lifestyle? And so I think APIs will just continuously be developed. And I think companies in the future, the more successful ones, will be able to collectively bring those together. Steve Case has talked about the third wave being a gathering of companies outside of the major cities in the country that are kind of serving the untapped markets, but bringing in these APIs with a collection of changing policies. So I think it's going to continue to grow exponentially.
So interesting. What disadvantages, if any, do fintechs have? Do you see?
Well, Scott got some good stuff on this.
Yeah, I kind of alluded to it a little bit, but I mean, just it's your classical size issue. If you're a big company, you've got tons of infrastructure already, tons of teams. Can you still move quickly enough to adapt to trends, to adapt to like all new stuff that comes out? If I am a big bank and I need to get there's a good reason, I guess, why there's Braintree and there's Stripe, and people don't use, let's just pick on big one, Bank of America, for that. You can't just go right out and do that. You go through Stripe and through Braintree, because they did all the legwork and made it ridiculously simple for a product developer to include payments or things like that in their site and in their things. Big established financial institutions also like where they're at, and so they do not necessarily want to move into some of these super new areas, like things on the blockchain or Bitcoin or similar things as well. They're very comfortable there, and for good reason. I mean, there's also the whole government angle on that kind of thing too, with regards to regulation.
So a big note on that, I think it's a good time to jump into topics on the shared economy. So I think the biggest disadvantage that established institutions have is they were built on this construct to kind of create this global empire that may not have the user's interests in mind, end of the day. And so now we're seeing a lot of startups like Robinhood and Acorn that are trying to deliver just as good of a service with almost no overhead, which is like the brick and mortar cost that these enterprises generally have developed over the years. And so when you think about that in the sense of the shared economy, and you have users trusting each other and they're transacting, you don't have to worry about as much control and governance because you build that trust in your user base. And that's like the philosophy that these companies are founded on, these smaller startups. So I think this trend of trust that is kind of infiltrating technology now, that will become an inherent like cornerstone in running a business or building a successful brand. And I think these large enterprises, they're going to have to make that shift eventually. And I think Scott mentioned how the utilization of the blockchain, the most important element of that is trust. If you have this one source of truth and trust, then you have a successful network of people working together. But that means you have to have everyone's best interests in mind rather than all people operating their business because there's a financial institution that has rules that make them do so. So I think those changes will have to happen, and the companies that don't inherit those changes will likely struggle.
Yeah. It does seem like more of the larger institutions are starting to collaborate or even gobble up a lot of these fintechs.
Mm-hmm. Yeah, that is one strategy that you can do. I mean, it's going on ever since there were big companies and small companies. You'll see that is one good way, or one way that big institutions with the money can kind of force themselves to adapt, is to just see any of the promising new startups and pull them in. I mean, from a tech side of thing, Facebook's been great at that. They made like their acquisition of Instagram is going to go down as one of the best ones ever because they killed a competitor and also got a great brand and product in their stable now too.
Yeah, so true. We actually got a question in the chat, and this might be right up your alley. So if you're familiar with blockchain technologies, I don't know if you know
like Ethereum
or Swarm. So Ryan was curious if you think these could eventually serve as kind of like AWS for fintech that you're saying is needed.
Yeah.
Do we want to go into blockchain now?
Yes.
You want to do that? I know. So I had you wait for 19 minutes, so I think you're ready to go.
So thanks for the question. I'm going to start out with what blockchain is. So those that are listening may have a little more context. So blockchain was a technology that was born in 2008, right after the subprime loan housing crisis. And it was basically this database design that would allow basically a community of people to make transactions or communicate with each other. And this ledger, which is basically all those different lines of communication, would be tracked. But every single ledger would be maintained on every single computer in the network. So a good idea or a good comparison would be, think of a map and think if you have several people all over the world and they may have a different idea of what the world looks like, a different map essentially. And so when all those people begin to have the same map, they know where everything is and their information is the same. We call that a shared truth. And so what blockchain has done is it's created this shared truth where every time there is a piece of information that's transacted, and the reason why I'm not saying financial is because it can be any type of data, people all know what's happening at the same time.
And the way that kind of works is like with that map you're talking about, like if 100 of us have a map and then someone like a bad actor tries to come in and says, hey, I there's this little spot on it that is different because I own this now. The 100 other people in that with that map can compare and be like, no, you don't, dude. You're wrong. You're out of here.
Exactly. And so so that kind of helps explain the fundamentals of blockchain. So it's this distributed ledger system where basically information can be documented over time, and it's unchangeable and infallible based on the network. And so what you can do with that now is you can basically create these global networks to share information, whether it be transactions, digital assets, rights, smart contracts, and you don't have to have the governance of a corporation or a government controlling or setting those rules, as long as those rules are set in the very beginning. And so to answer your question, basically, I imagine, and a lot of people are predicting, that blockchain technology will eventually reinvent the internet. And the financial industry is taking this very strongly because what happens when a small company that doesn't have to have the enormous infrastructure, only access to the internet, can maintain transactions, rights, contracts, titles for a fraction of the cost, basically what it would cost to send an email. And so the brick and mortar infrastructure will no longer be a demand. It's just building a trusted brand, but then also building a network with the breadth to reach your users.
Yeah, and I think part of that opportunity is like refreshing some of that tech that is building up those financial institutions. Just to be upfront, Raphael is probably a little bit more bullish on the blockchain than I am. I'm a curmudgeon that way, which is great. We have great talks about it.
Yes.
But I mean, you go to any bank or any credit card company or whoever, and you dig even just a little bit below the surface, you're going to run into mainframes and ancient databases because everything is still running off of that. And it's creaky. I mean, some of this stuff is 50 years old, which is kind of scary when you think about it.
Yeah.
I hope they're all off of tape by now, let's just say, put it that way. And there's an opportunity with it, instead of all this infrastructure and this overhead for maintaining all of this legacy stuff, because that is so expensive. Finding the right person who can like administer that, good luck. They don't grow on trees so much. Not as common as a JavaScript developer will say.
Mm-hmm.
And if you have something like this, where you can essentially distribute that load of that infrastructure across a massive network, then that could be a huge burden lifted from any institution that's in there.
Mm-hmm.
So you don't think that blockchain will hit?
I mean, we could go into it, I guess, a little bit more. I mean, the biggest issue, like, there is that trust, which I think is cool. The catch is that holding on to those bits of information is a little bit trickier. Like, so I have to store that information somewhere. It's digital, so it's got to be on some disk somewhere. If someone can figure out the administration of that little piece of data and transfer it, because that's what you do with things on the blockchain, you transfer them to new owners. Mm-hmm. You can't get that back. So Bitcoin is probably the most well-known facet of the blockchain and similar things. And you'll see essentially what they call online wallets. A couple of big ones in the past have been stolen. And if that's stolen, you are 99% likely not to get that money back, period. It's like cash in that sense. If I take $20 out of your wallet, you don't have $20. And you can't get it back unless you can track me down. And due to the nature of blockchain is it's anonymous. So you see essentially a long string of numbers and letters of who's the new owner. And you have no idea who that is. So from a consumer standpoint, the risk that you need to understand is that if you use a traditional bank, your money is insured by the federal government. If you're on anything in the blockchain or Bitcoin, nothing. Like it's kind of Wild West in that sense. So I think there is a lot of potential and a lot of opportunity for that, especially in certain circumstances. But be careful, because there's no free lunch in that.
Mm-hmm.
Do you think more fintechs will start to leverage blockchain technology?
Yeah, so I'll come up with I'll give you some examples. So in fintech, we're starting to see these radical business ideas coming out, because now we have access to like investment strategies that were normally reserved for the ultra wealthy. So with that being said, now we're seeing the opportunity, like, why can't we collectively purchase a property with people I don't even know? And that is that safe? Can I rent something? Or can I get access to exclusive securities that are usually reserved for the ultra wealthy?
Let's dive into that house thing. You mentioned that before me, and before this meeting, it kind of blew my mind a little bit.
So now today, there's actually the option where you can sell a portion of equity in your house. And so if you wanted to raise money, and let's say the interest rates for other sorts of lending aren't really opportunistic, this is an option now. And so we're starting to see this become possible, because that source of truth. Now we have this shared economy philosophy, and now we have the ability to build this infrastructure with blockchain. And also, I should mention Ethereum, which I think a lot of people are predicting that Ethereum in 2017 will become the main platform. You will be starting to see blockchain consumer products.
Is Ethereum another currency?
Ethereum is a similar network that's built with a blockchain, similar to Bitcoin, but it's not restricted to financial transactions. So Ethereum is a network that you could use to build maybe something where you could maintain a listing of property contracts or titles, or somewhere where you could save people's identities, or maybe you can ensure the protection of creative works of art.
Hmm.
And so Ethereum is really just kind of like the architecture, and companies can take this open source software and they can inherit it and modify it so that it's unique to their use case. But just the fact that Ethereum has actually never been successfully hacked, and so because of that, and in its 1 year of development, it was worth $1 billion. So the development community, and especially around fintech, are seeing this as a great opportunity, because now I can from where I was before, I can move to a much safer form of protection and documentation, and have that network be widespread at a much lower cost. And so I think we're going to see a lot of exciting change with those technologies.
That's interesting. So it essentially enables you to almost like sell stock in your house or sell shares and
Yeah, that's
wow.
kind of the philosophy. And with that being said, these technologies are happening because with the cause of inflation, and with income rates not really moving forward as fast as they previously were, we're going to have to adapt to that. And so if millennials can't purchase a property, how can we provide an investable asset without them being able to buy a house? People are migrating towards cities. And so I think it's by 2030, 80% of the population will live in cities. And so with the restrictions of living in a city, how can people still create that financial security? I think it's going to happen with these really unique and creative investment opportunities.
If my 9-year-old keeps mouthing off, can I sell her room on Ethereum?
Maybe.
I think you can through
Yeah?
Airbnb.
Oh.
Like,
That's
rent
true.
it out.
Okay.
Yeah, there you go.
Well, I'm sold.
Yeah.
So kind of jumping back to fintechs just to give more of an understanding of what they are. Can you give examples of any that you guys are currently using, if any?
On the payment side, I mean, everyone that basically uses Stripe or something like that. So that's a big one. Even I've seen it like even at churches, like just paying for like a little church get together lunch. You just go up, swipe your card, and you're good to go on that. That's pretty cool. To pay people back, another Stripe technology, or no, I'm sorry, Square. I get them mixed up all the time. It's just to send whatever to pay for something, like someone bought tickets to something and saying, here's your $20, and send them over Square to them. That's very powerful, very easy. Anytime I don't have to write a check is a time that makes me happy. Do you even know what a check is?
What are those? I keep those in my phone books.
Yeah, that's good. Bookmark.
Yeah. A few others I think are kind of creating that radical change. Venmo, which is a PayPal product, what they've done I think is pretty profound, is they've created this social aspect of finance, which normally would you ever share purchases that you're making with the general public? I wouldn't think so. And I think they kind of disrupted that thought by creating this peer-to-peer payment app where you publish what you're doing. Like, I went to lunch, here's $5 for this. So I think that's interesting to look at, and from a behavioral change of what we're seeing, what we wouldn't think would happen maybe 5-10 years ago. Wealthfront, which is a platform where you can invest with the intelligence of a large firm or a fund, but not have to pay the large fees.
Yeah.
So
I use Wealthfront too.
Awesome.
Yeah.
Yeah. So I think those investment tools are going to be making a lot of opportunities for individuals that don't have as much access, but as long as you have the internet.
Yeah.
That's interesting. So kind of on that note, where do you think fintech is headed?
Yeah, I mean, at one point we can't tell, and that's the fun part. The person who does figure that out is going to be very rich, probably. I think we're going to see a lot more of these, this collaboration. I think we're going to see some just new stuff like Venmo that we, 5 years ago never would have thought of, even 2 years ago would have thought of. See more things like that. Well, Ty, and there's probably, people do like to jump in with the fads and the trends, so we'll probably see some silly things, but also some really powerful stuff. Like, I'm very curious to see what's going to come up, and especially how the big banks and financial institutions are going to have to respond or kind of become irrelevant.
So I have a couple things to throw out on that question. I'm actually really excited about what's coming next because of blockchain and Ethereum. So a lot of larger banks from the world right now have come together and they've created this consortium called R3. They recognize that blockchain is here and it's going to radically disrupt the internet, especially the fintech space. And as Paul has mentioned, a lot of great anecdotes about how these big enterprises are having trouble evolving. So they know blockchain is here. And so they've tried to build this group. But the problem when you build a network of large institutions that have these rules they've ingrained for decades, how are they going to conform to each other's way of doing business all over the world when they all have different rules to follow and they all have very large egos, I would imagine? So, and you're noticing now some of these bigger banks, JP Morgan, I believe, has just recently dropped out. So that is evidence to show that if they are willing to conform to this globalized shared truth of creating equal opportunity for all their users, they're not going to inherit the value of the blockchain.
I don't know if conform is necessarily the right word,
Yeah,
but like roll with the tide, I think.
Yeah. And
Right.
so I think that's something to watch, because smaller networks and startups want to create that kind of equality of access for their users. And so one of the biggest challenges we're seeing today is protection of title over property in underdeveloped countries. And so if you can build financial tools to create that protection for users, you're going to be able to leverage access to billions of individuals that have never seen maybe even having a bank account as a reality. But now they can protect access to their assets through this blockchain. So another thing is the machine payable web. We're starting to see people exploring, can I pay with something with my car? If I have an autonomous car, can't my car just buy gas for me and just hit the pump? And so as where legislation would formally restrict us for someone buying something on your behalf, if it's a service, maybe something that's government regulated like a plane ticket or a bank account or changing things like that, maybe investing, we're going to start seeing machines being embedded in these type of transactions. And that is tied into the Internet of Things, where pretty soon when things are audibly driven and we have this shared truth, there's going to be a lot more seamless connection between our finances. Like, why not? Why can't I just talk to my phone and say, hey, can you pay Scott $10 for lunch today? And it just happens, recognizes my voice, knows where I am, and that transaction is protected. So I think we're going to start seeing more of this full like evolution of the experience of how we manage our money.
That's so interesting. I've heard the example of like for instance, if you have a Tesla and you need to go pull up to recharge the battery, can you just pay for it by plugging your car in to charge it and simultaneously pay for whatever you used?
Yeah.
And then on a similar note, with a lot of these auto insurance companies installing that little device in the car to track kind of mileage and speed and things like that, if that could automatically bill based on how you're driving and things like that.
Well, I don't like that.
I have one more pretty cool example. DevCon tested a prototype, I think it was last year, where they wanted to figure out if it's possible, could I give a credit to passengers if their flight is delayed? So it kind of gives an incentive to the passenger. I want to fly with this airline because they're going to credit me if the flight's delayed, rather than this other airline, maybe not. So, and they created a prototype. And the great thing with the autonomous, the way the internet is run so autonomously with blockchains and these smart systems is you would get that reimbursement faster than you can get the notice that your flight is delayed. And so I think we're going to see those little kind of anecdotal experiences popping up now related to money, which I think is going to be opportunities for applications and businesses. I mean, it's unlimited.
Yeah.
So.
Yeah. I think, do we want to cover like anything other kind of next steps or just general advice? Anything like that? I mean, I think for the big financial institutions like we talked about, I don't think it's too late yet, but I think the time is coming, and you need to go to that effort and fix. If you have dysfunction in your business, fix your internal teams first. If your internal teams can collaborate with each other and don't have to do that slog of trying to get information from one group to the other, then you're going to be in good shape. And then you can move that out to your customers, to all the external people out there, so they can build things and that you can be a part of that. Because otherwise, the little guys are going to come up and they're just going to eat your lunch. To the little guys, you already know what to do. Don't, when you do disrupt and become the next big people, keep that in mind. And if if you don't have that collaboration, if you don't have that ease of use, then you're just going to make the same mistakes.
Yep. And create a great user experience.
Yeah.
People will notice that.
Yeah, you're ultimately building a product.
Yeah.
And we've talked at length about products. It's kind of what Tallwave is all about, is making a successful product for a business, big or small.
Yes, absolutely. And thinking about all those moving pieces, like, if you think you have a great product for maybe this group, it might be radically different from this other group. So take the time to get to know your customers and build those relationships.
Yeah, customer empathy is huge, even in the financial area. Because I mean, you think who banks generally aren't really known for being empathetic with their customers, right? And I mean, so you've got all this opportunity, and you've got access to more people than you've ever had before, like billions of people now instead of just hundreds of thousands or even millions. And whoever can do that right and still treat their customers like humans is going to be at a great advantage.
Yeah, and I think, like you mentioned, some of the larger financial institutions, it's like they're the ones with the large customer bases, but then it's these fintechs that really have recreated the type of experience or built something to match the type of experience that we want. And so it's some of the more forward-thinking banks are now collaborating with those fintechs to bring that in. So I think that's an interesting point, and it just seems like everything that we've been talking about today has been kind of going back to the user experience. Like you mentioned being able to just say, hey, send Scott $10 for lunch.
Yeah.
And so that's an experience that you would ideally like to have at some point. So yeah, that's interesting.
Yeah, the tools are there. They're out there and they're ready.
One last question.
Yeah.
To kind of wrap things up, do you think, are there any regulations currently that are hindering fintechs that maybe the larger players kind of have a foothold on that could be stalling some of the fintechs?
Yes, I think, well, there's probably more than I know, but a few that come to mind are, so some of the restrictors in the financial world were put into place to protect those with wealth so they would always have wealth. And so I think you're going to see a lot more transparency with maybe some tax liability or tax shields that have been created in the past. And I think the general public will start to see how maybe there's discrepancy there and how that should be changed so there's more equality amongst consumers. And with that being said, being an accredited investor, having over $1 million to invest, I think we're going to start seeing that not mattering as much. So you're starting to see, I think, policy changing towards individuals not being as restricted to invest. I think there's countless examples in that realm, but I think those are a few. One huge change that I don't think a lot of people really took the grasp of how much this is going to change the financial industry is the crowdfunding. So before, when you couldn't invest unless you were an accredited investor, but now we're seeing people are investing in ideas without really knowing if the money or it's going to succeed. And that is like kind of a crazy thought that I can put a video online and I can raise $1 million from random people all over the world, and I can make my dream come true for me and them. And I think just that mentality is wild. So if those kinds of things keep happening, it's going to be opportunistic.
Yeah. Well, I think that's an interesting note to end on.
Right.
So thank you everyone for tuning in, and we'll send out a link with the recording of this in case you missed anything. So with that, have a great day.
Thanks a lot.
Thank you.